So in this lesson, we're going to be talking about trading and investing. They are different concepts and we're going to be talking about the differences. Without no further delay, let's get started. What is trading? Trading is an active style of participating in the financial market that seeks to outperform the traditional buy and hold investing techniques. So for example, and what all of us know about investing is you buy a particular asset. Let's say you want to buy a plot of land. You buy the plot of land and then hold that plot of land for the next 5, 10, 15, 20 years. For traders, things are not done that way. We want to make money consistently over a period of time. The way it works is instead of holding a particular asset for a long period of time, you can keep buying and selling them for profit over that period of time. Do you understand me? And one of the important things you can do to improve your chances of being a successful trader is to treat trading as a business. Trading is not gambling. Trading involves so many things. Trading is technical. So you want to take this course very seriously. You want to take trading very seriously. You want to focus on it. You want to check it out every day. On the other hand, investing is the act of allocating resources, usually money, to a particular asset for income over a period of time, and investing take a long period of time, usually 6 months and above. That's investing. You understand? So when it comes to trading, it is a shorter form of investment and it is more technical. There are other things that you put into consideration when it comes to trading than investing. Investing, you just want to know about what you are investing in. You want to know about the fundamentals of the market, the vision of the company you are buying, the future partnership, things like that. That's what you want to know when it comes to investing. But when it comes to trading, there are many things that are involved, and we're going to be talking about those things in this course. The major concept of trading is to buy low and sell high. That's the only way you can make money in the market. You want to buy a product for 2 naira and then you want to sell it for what? For 5 naira. Do you understand? How do we know when to buy? How do we know when to sell? That's when you will start to need the full knowledge, the technical knowledge of how to trade successfully. Components of trading. We have 4 components of trading. So these components are fundamental analysis, technical analysis, money management, and risk management. And when it comes to fundamental analysis, we really don't use this analysis as traders. Investors mostly use this analysis, and these analyses are non-technical measures that are put into consideration while trading or investing. It is less important for short-term traders, while it is key to long-term traders/investors. So there are some traders that enter a position. That position lasts about 6 months to a year, depending on the time frame they are trading on. For long-term traders and investors, they can use fundamental analysis when it comes to determining what to buy or sell. Technical analysis. This is basically forecasting the future financial price based on examination of past price action and movement by studying the analytical statistics gathered from trading activities. So what this thing is telling us is, for us to determine what something is going to be in future, we have to go and study the past. Let's say, for example, we want to check Bitcoin. For me to check Bitcoin and do analysis of Bitcoin, I want to check what Bitcoin was selling about a week ago, 2 weeks ago, 3 weeks ago, even back to 3 years ago, for me to determine where it's going to be in the next or in the nearest future. That's basically what technical analysis is all about. The third one is money management. Money management is a crucial part of trading, and most traders lose huge amount of money due to poor money management. We are going to be discussing how to manage your money in the market, how not to lose all your money in one trade, how not to blow your account in just a week of registration. Because let me tell you, 95% of traders lose money in the market. They lose money in the market. Fact. So only 5% make money. So if you want to be part of that 5%, you have to pay attention to this course and follow all the rules that we are going to be giving you in this course. So the fourth one is risk management. In this part, we are going to be analyzing our financial risk, how to minimize risk, how to minimize impact of risk in the market. So for example, there was a depression or a recession beginning of this year. This is 2020. There were many signals in the market that were showing that there was going to be recession at the end of last year. So when it comes to risk management, we will be able to minimize our risk when it comes to investing. So at one particular point, when you are losing, we want to know, okay, this is where I will be taking a loss and then leave the market, because do not stay too long in the market when the market is dropping. Do not stay too long in the market when the market is dropping. The better your risk management is, the better your chances of making it in trading. Do you understand? So we have types of trading. When I say types of trading, I mean this kind of trading is really time-based. So when you say type of trading, is basically time-based. We have scalping. So as traders, there's a particular time we enter the market and we leave the market. Do you understand? So when it comes to scalping, is about entering the market between seconds and minutes. You enter the market, you buy a particular stock or cryptocurrency, you buy it and sell it within seconds and minutes. Trust me, this particular type of trading is very difficult and I don't advise it. I don't recommend it for starters. You don't want to scalp as a beginner. Scalping is an expert skill, and although many people find the idea attractive and exciting, I wouldn't recommend it for beginners. Please do not scalp as beginners. When it comes to day trading is all about buying and selling instruments. It could be forex, it could be stocks, it could be cryptocurrency for profit on that same day without holding any position overnight. So in this one, it could take minutes, it could take hours, but your position must not last more than 24 hours. You don't want to take it overnight. Do you understand? No position should be taken overnight. So if you buy something today, you must sell it today. So that's form of is called day trading. And we have swing trading. The time is more than day trading. It usually lasts more than a day to 2 weeks. That's what swing trading is. You can buy something today and you're selling it next week. That's what swing trading is. So position trading, this could take weeks to months. It could take 3 months and you're still holding that position. Sometimes I take that kind of trade, but very rarely. I mostly stick to swing trading and day trading, and we're going to be talking more about how to do those analysis later in this course. So that will be the end of this lesson. Take a coffee and then we'll see you in the next lesson.